What's up guys, welcome to today's video. So today guys, I'm going to walk you through and show you a couple of things on how to understand what market structure. So make sure you pay attention, because at the end of this video you are going to understand what is technical analysis, what are the types of market structure, and the last one, which is how to identify trends. So in this video I'm going to walk you through that, so make sure you pay attention and watch this video till the end, so that you don't miss out on any of the videos aspect of this teaching. All right, so let's get started. So previously I walk you through different types of market analysis, so whereby I talk about technical analysis. Basically I am a technical trader, analyze based on technical facts. All right, so technical analysis, it is the study of historical price action in order to identify patterns and determine probability of the future direction of price. All right, just like I explained earlier on. So that is what technical analysis boils down to. So in this whole video we are going to be focusing on how to use this information or technical analysis to be able to analyze market structure. All right, so moving on guys, there are three different types of market structure. Right, we have the uptrend. In uptrend, what do? You look for buying opportunity. Right, then we also have the second one, which is downtrend. Then downtrend, what do? You look for selling opportunity. And the third one is ranging. Right, in ranging market you look to do what? To buying and also selling. Right, so this is supposed to be selling. All right, so you look to buy and also to sell at the same time. So I'm going to be breaking each of these things down and show you how you can be able to identify those things in the market. When you hear uptrend, if you take a look at here, you see that I'm saying that you need to look for buying opportunity in an uptrend, which means you are not to fight the trend. You understand? If the market is going up, all you need to do is to find a means in order to join that upward movement. All right guys, so I'm going to explain each of them, starting with what? Uptrend. All right, so to demonstrate this for you, I'm going to use structure. All right, let's take for instance, in an uptrend, what you need to expect or what you need to understand is that there is a way the market move in this direction. When market takes up, it pulls back. All right, then it takes the next move, it pulls back again. It takes the next move, it pulls back. It takes the next move, like that, until you reach the end of that trend. All right, so when you see a structure like this, when market is moving like this is considered to be what? Uptrend. All right, because the overall direction of the market is upward. So, but how do you really understand, what are the characteristics that you can expect from an uptrend? All right, in an uptrend you will see what we call higher high. All right, that's one of the indications that you're going to see. And the what? Higher low. All right, let me just illustrate it for you. This place is what? Higher low. This place is also what? Higher high. Here is higher low. Right, the same thing, just the same thing here, higher. So guys, so this is what you are to expect. Sorry, I think I made mistake. I went and let me clean part of it. So this is what you are to expect in an uptrend. All right, you'll be seeing something like this, which is showing you what? Higher high. Here is higher high. So whenever market moves up, on coming down here that serve as resistance, here now it serve as resistance, right? This region. But in an uptrend, market is going to break out of it and create a new high, which is what we see here as higher high. Then it pulls back here, then continue again. On this, reaching this area again, it's going to break it and create a new high. On reaching this resistance again, when this pullback is over, when it starts moving on reaching this place that serves as resistance, it's going to break it and create a new high. So when you start seeing higher high in a market and the higher low, which means this low here, which means the last place that the market bounced back, the second place, it did not reach up to this level, but it's created a higher low. You understand? As you see here is a higher low, here is a higher low, like that, upward. This is what will tell you, okay, this market is what? In an uptrend. It keeps creating a new high. Alright? So this is what? This is uptrend. Alright? So this is considered what? As an uptrend, right? So moving on, guys, I'm going to show you the second one, which is downtrend. Downtrend is more of opposite of an uptrend. All right. So in a downtrend, you expect something like this, whereby market is making lower low like this. It may not be perfect, just kind of have an idea of what I'm trying to show you. Something like this. So what am I trying to show you in this structure? If you notice here, you see that market is creating what? Here is what? Lower high. Alright? While here is what? Lower low. Lower high. Here is lower low. Double L means lower low. Here, lower high. Here is lower low. Just like that. So if you look at this, you discover that the overall direction of this market is what? Down, which is showing you what? Downtrend. In downtrend, one of the characteristics you can see is that it's creating what? Lower low. A situation where on a normal, you know that here is a resistance. So if market pulls up to this level, and if the trend continue, is supposed to bounce off back, here supposed to here serve as support rather. So this place supposed to keep push it back, but it break this level and continue, pulls back, and coming down to this region again, it break it and continue heading down. The same thing happened here. On coming to this region, it break it. So when market keep creating lower low and what? Lower high, is a summary that the market is what? In a downtrend. That is how you can be able to identify downtrend. All right. Then moving on, guys, I'm going to show you the third one, which is what? Which is ranging market. In ranging market, how do you know that the market is ranging? In ranging market, what you should expect is when market starts moving, maybe in a stock like this, market is stuck in one place, right? So in this scenario, you discover that market is just moving within this zone. All right. So when you notice that the market is moving in this zone, it's considered as what? Ranging market. All right. The market is ranging. Alright, so the market is ranging. So how do you approach this? You wait. When market comes down to this level, you buy. But whenever you identify ranging market, always pay attention. Ensure that at least you have up to 2 touch here. Alright, you have up to 2 touch. When it comes back to this level, before you start looking for opportunity. When in an uptrend, when market is moving up like this, you look to do what? To a buying opportunity. Maybe at these regions. You understand? that you can enter. But in a ranging market, you look to enter within this region whereby the market normally bounce off before you start moving on. So this is what you used to know ranging market. Remember that ranging market, there is another one we consider as, when market is, a kind of consolidating, you understand, whereby the market is not clear, you just keep moving within, you see the candle forming small. This kind of thing is always advisable to what? To avoid it. Don't trade the market whenever the market starts moving. And this thing is totally different from this, because this one, you can see a clear view of the direction of the market. You understand? You can be able to enter your market here, then take profit around here, or buy here and take profit up here. But in this range, in this particular consolidation, you discover the market is too tight. It's not giving you opportunity to trade. In such scenario, you wait for either breakout before you enter the trade, all right? Or you break above here before you enter the trade. Such, when you notice something like this, you are not expected to trade it. The same thing is applicable to downtrend. When market is moving like this, or creating new lows, that is showing you that the market is sending them, whereby here can also be an opportunity for you to enter and join the trend, since anytime you make a higher low, it's going to create a new high, all right, in the market. So this is how you can be able to identify, but it's always easier whenever you are looking at it in the chart. By the time you take you to the chart, so I want to take you to the chart so that we can be able to take a look at some of these things I explained to you in the chart, all right? So by the time you look at the chart, you discover it's always easier when you are looking at, maybe you are reading a book or you are looking at it in the way I draw it. When you open your chart, it's a totally different ball game to some extent, not really typical, all right? So if you take a look at here, you see that here we have what? We have a downtrend here, all right? Just like I explained to you, here we have a downtrend. And in downtrend, what are the characteristics we are looking for? You are looking for what? See that here is what? You see lower high, all right? Here is lower high. The same thing is applicable to this place. You see the same thing here, lower high. The same thing here, lower high, all right? So when you look at, if you want to analyze this market and you are seeing something like this, you need nobody to tell you, okay, this market is selling. And this one now, you see that we have in a kind of lower low, something lower low, all right, lower low. Here is lower low, I swear. So this is when you see some of these things in the market, you should be able to identify. Then what do you do again? If you take a look at here, you see the same thing, lower high, all right? So with this, you should be able to know, okay, this market is what? In a downtrend. Identifying the trend, market structure. Remember I said that we have uptrend, downtrend, and what? And we also have what? Ranging market, all right? This example is example of what? A downtrend. And in a downtrend, you look to do what? To sell. So guys, after you have identified the trend, which in this case we have identified that is in a downtrend, before you're able to look at where do you actually click buy, all right? So you don't just click buy immediately you find out that it's in a downtrend. Okay, so moving on guys, I'm going to show you example of what? Uptrend, all right? So I'm going to show you example of uptrend so that you can be able to compare it with the illustration I give you earlier on, all right? So let's take a look at this. If you take a look at this, you discover that here we have that the market here is creating a new high, all right? You see here, you see higher high. The same thing I showed you earlier on, right? Why here is what? Higher low, higher high. Here is what? Higher low. Here is what? Higher high. Higher low. All right. So the same thing, you can just maybe you go down and check out some of these things you'll be able to see that it keep repeating in the market. All right, here is what higher low, right? So the same thing here, you understand, you see it here, you see it here. All right, so but on reaching here, the market below here, which is not, was not able to create a new high here. It come down here before it starts creating another new high. All right, but this place now, the market validates what we just explained. All right, which is whereby this pullback actually break this level. So just like I told you, in an uptrend, the market keep creating a new high, which means here was the high before you break out of it and create a new high, then deep low. But this dip now did not reach up to this level. It stopped at this place, which is what? A higher low, whereby overall the market keep moving upward, right? Which is an example to illustrate the fact that this market, this particular part of this market is in an uptrend. So these are the ways you can be able to identify when market is in an uptrend, by observing and being able to spot the higher high and the higher low. If you are not seeing something like this, then the market is not what? In an uptrend. So the characteristics is what? Whereby a market is creating a higher high and a higher low. That is what you used to know when the market is an uptrend. All right. So guys, the third one, which is another type of market structure, is the ranging market. Here we have example of it. So in this example, if you take a look at here, you see that in this chart we have something like this, a situation where the market is stuck in a range. Then if you draw this, use your lines, you can use any of them. All right, so by the time you draw this, you discover that the market is stuck within this range. All right, the market is stuck within this zone, whereby the market comes up here, it drops, it comes out here, it drops. So in such scenario, you look to buy at the bottom and sell at the top. So whichever way, remember I told you can either buy or sell, right? So in such scenario, you'll be able to see it, you can either buy here or sell at the top and take your profit at the bottom. So if you notice this, when market is moving within a range, that is what we say is what? A ranging market. So with this, you should be able to identify, each time you open your chart, you ask yourself, what is the market doing now? Is it trending? If it's trending, is it uptrend or downtrend? Or is the market actually ranging? So whichever one, you should be able to find out. First thing is to find out what the structure of the market. Is it ranging or trending? Which in this video, if you don't quite understand it, go back and watch it again so that you'll be able to know what I explained as the ranging and the trending market. All right,